Good afternoon, everyone, and welcome to today's webinar. Today's webinar is Updates to Section 184 Indian Home Loan Guarantee Program, presented by Instructor Eric Sprinkle. My name is Alyssa Atkins, and today I will be your webinar facilitator. I am the Training and Development Coordinator for the Native Learning Center. A quick disclaimer before we get started. This webinar provides a summary of fundamental concepts, requirements, and/or procedures within the allotted 90 minutes. The material we'll discuss does not illustrate all possible scenarios that could be applicable. Also displayed here is our copyright infringement law. This is just a friendly reminder that the webinar presentation materials are protected by copyright, trademark, trade secret, and other intellectual property laws. Before we get started, I want to familiarize you with some of the features available to interact with today's webinar. If you look at the top of your screen, you will see an icon of a hand with a plus sign. By clicking that icon, you can either raise hand, agree, disagree, show applause, show laughter, or even signal a request like asking an instructor to speak louder or slow down, please. Now, if you look at the screen, it should look similar to this graphic here. To the bottom left, you will see a pod that says Files. Here you will find any handouts or appendix items included in today's presentation. Please feel free to download a copy for yourself. Just hover over the item you want to download with your mouse, then click the arrow pointing downwards to download and save onto your device. Once the item is downloaded, it should appear on your device's download section. The second pod to the right, labeled Web Links, is where you will find our survey about today's webinar, along with the link to receive our weekly newsletter, connect with the Native Learning Center on LinkedIn, and any other links that will be seen throughout today's presentation. Finally, to the right of the screen, we have a chat pod available. This is how you will communicate with the instructor and NLC staff. If you have any questions during the presentation, we welcome you to send them in by using the chat box. Simply type your message into the space that says type here and hit enter or click that up arrow icon button to submit. We do encourage class participation, so please feel free to write in those questions or comments. Tech support issues should also be submitted here. Know that most can be solved by leaving and rejoining the meeting room. Let's all get the chat box going together now by typing in your name, where you're joining us from, your tribal affiliation, and your work or role in Indian country. It is now with a great pleasure that I introduce Eric Sprinkle.
Thanks so much, Alyssa. This is Eric Sprinkle of First Tribal Lending. First of all, I just want to thank the Native Learning Center for allowing us to be a part of this and share information around the HUD 184 Native American program. Just to give you a little bit of background, I have been doing the Native American lending, the Section 184 program for just over 24 years now. Our group here in Sioux Falls, South Dakota, within our branch, we help tribal members anywhere from the West Coast to the East Coast and anywhere in between, along with Alaska, as well as helping Native Hawaiians with the 184A program. Within our group here in Sioux Falls, we also have our own processors that help process our loans for us. We have our own dedicated closers as well as underwriters. So everything is underwritten in-house with this program. So I look forward to going over this program with you. Again, ask any questions along the way. Like Alyssa said, if I'm talking too fast or I need to go back over something, just let me know. So the Native American program, kind of want to give you a little bit of background around it just to begin with. So it started back in 1992. Back then there was no financing available for tribal members on tribal trust land. If you were to go to the bank and try to get a mortgage loan, the problem they had was the fact that the land was either held in trust or it was individual trust and or allotted. And so there was no financing available because you weren't financing the land in-house together. So back in 1992, the Section 184 program was developed. Along with that, they worked with tribes to approve home site leases, as well as have their foreclosure and eviction procedures completed. So that's kind of how this all got started. It is annual funding, which means that we've had probably Over my 24 years of doing this, I think we've had maybe 3 different times where, their fiscal year is October. And we've had a couple years in there that it has been delayed with funding due to government funding. That goes back probably 5 years ago or so. But it hasn't been more than 2 months at the very most that it's been delayed with funding. But again, it is annual funding, and it is a nationwide program. And I'll kind of go through in these next screens or slides the areas that you can use this program. So this next slide shows the different states that you can actually utilize the Native American program in. The red indicates the areas where it's just specific counties. The other areas there in the orangish yellowish color there, that one there allows you to use the program anywhere in the state, whether it's on or off the reservation. And obviously the ones in white, those are states that just are not approved to use the Native American program. This next slide shows the states that have just specific counties that are approved. So for instance, that very first one up there in Alabama. So if a tribal member wants to utilize the Native American program in the state of Alabama, you don't have to, number one, be a tribal member in that state. You can be a tribal member from any other reservation as long as you are an enrolled member and use this program in those specific counties in Alabama. So for instance, Baldwin, Elmore, Escambia, Mobile, Monroe, Montgomery, and Washington, those would be the specific counties that you can actually utilize the program in. A couple of the updates within these states, Tennessee is a new one that hasn't been there for more than probably a year and a half. I think maybe about a year and a half. But within Tennessee, they have specific counties that you can utilize the program in. The same with Texas. Texas, for ever since the existence, it's always been El Paso, and it was El Paso and Hudspeth. Now they've opened up quite a few more counties in the state of Texas. Same with Virginia. Virginia has been around a little bit longer, but again, specific areas within Virginia that are allowed. Unfortunately, the entire state is not opened up. So talking through some of the things with the Native American or Section 184 program, remember you can use this program on fee land where you would be paying property taxes, or you can use it on trust land, allotted trust land, or in some areas there's restricted fee land. And this program, would not be in existence if it wasn't for, the HUD office creating it to begin with, the lenders utilizing the program and doing the outreach to not only the tribes, but to individuals as well. But also it's the help of the tribes, the tribal housing authorities, as well as the BIA. All of these areas need to come together to make this program work. Just going over some of the highlights of the program. The big thing with the Section 184 home loan program is there are no income limits. I would tell you that comes up a lot. People calling and asking if it falls in line with, like, when you hear the word HUD, they sometimes think that there might be some income limit guidelines around it. There is no income limit guidelines. You can use the program, based on your income and debts, and we'll run numbers to let you know what it appears you may qualify for. The other thing is it's not credit score driven, meaning if we pull a tri-merge credit report on you, and let's say you may have some medical issues out there where the tribe or Indian Health Service is covering those. However, they just haven't been paid yet. So it's unfortunately showing up on your credit and bringing your credit scores down, the program's not going to look at your credit score to qualify you. They are going to qualify you based on your actual credit. So not credit score driven. Flexible underwriting. And what I mean by that is it's one of these where we don't have to, we're not plugging in a bunch of information into the computer and having the computer tell us whether or not you're approved. It's actually manually underwritten. So we actually have live underwriters that are reviewing the package that we submit into them, which is nice because if there are some areas there that, we might be on the fence on due to, some credit that was out there, having that live underwriter to kind of talk through the scenario definitely is a win with the program. The other nice thing about the program is, and this is something that they just went away with, there is no monthly PMI. So no private mortgage insurance on a monthly basis. They did have that monthly PMI, which is about 0.25% on a monthly basis. However, they have removed that monthly PMI. So huge benefit of the program, no monthly PMI. The other nice thing is it's a low down payment. We're only talking 2.25%. So if you put that into perspective with other programs, let's say FHA, with a straight FHA loan, your down payment is 3.5% down, plus you have the monthly PMI on top of that. Conventional lending, depending on the program, you may have a 5% down or a 3% down, but you would still have that monthly PMI. So nice thing about the program, no PMI, low down payment. Debt ratio, the debt ratio is set at 41%. So it's basically your monthly debts, credit card debts, car loans, whatever those are showing on the credit report, plus your new mortgage payment divided by your gross income. That comes out to be that 41 or less is what they qualify you on. In regards to interest rates, the program is based off of market rates. So it's whatever the rates are currently on any given day. That's where the rates are going to be set at. Next slide here, who can get a 184 loan? So the big thing with being able to utilize this program is you have to be an enrolled member of a federally recognized tribe. We have had many individuals that are descendants of a tribe. The unfortunate part is the program tells us that unless they have an enrollment number and they are fully enrolled with the tribe, that's the only way we can help them by using the Native American program. Also, you can be an Alaska Native. We actually help tribal housing authorities. Tribal housing authorities can be the borrower as well with this program, as well as tribes. The tribe can be the borrower and, let's say build 10 to 20 homes, and they can turn around and either rent those back to their tribal members or turn around and sell them to tribal members. The loan features of the program. So it is a fixed rate program, and it's set on either a 30-year, and you can go down as low as a 15-year. The program does allow you to make extra payments or pay the loan off early. You'll never be penalized for that. So it is a fixed rate, and the term is up to a 30, and we can finance down to a 15-year. And again, if you want to pay it off in 10 years or 5 years, you can do so by paying it down each month early and paying that off. You'll never be penalized for it. The program does have a guarantee fee. So like FHA, the Native American program does charge a 1% upfront fee just one time when you do the loan. It's 1% of the loan amount. So that 1% guarantee fee can either be paid as part of your closing costs at closing, or that can be financed into your loan at the time of closing that loan. And comparing that to like FHA, FHA charges 1.75, whereas with this program, it's only 1%. The HUD Warranty 4 loan is assumable. So if you currently have a HUD Warranty 4 loan and another tribal member, let's say you need to move, or something comes up and it's just not working out for you, you could have another tribal member get credit qualified and assume that loan from you, and they would be taking it over from exactly where it's at right now. Again, there's no adjustable rate mortgages. It's a fixed rate mortgage. And with this program, it's only for single family housing. So no commercial financing available at this time. Different loan types for this program. So within the Section 184 Native American program, you can purchase an existing house with the financing. You can do a remodel of an existing house. Let's say you currently own your house and you're wanting to do some rehab to it. Maybe you want new siding or new windows or a new roof. Maybe remodel the kitchen. The program allows you to do that refinance to add in that remodeling cost. You can also do a purchase and remodel. I will tell you there's some things that come up with that, depending on the age of the home and everything that goes into what it is that needs to be remodeled. The program does allow you to do that purchase plus remodel. And then on top of that, the program allows you to do what's called a single closed construction loan. And I'll go through that a little bit later on here in the slides. But it allows you to do new construction, to either buy a brand new manufactured home, a brand new modular home, or do a stick-built home from ground up using the Section 184 program. And then on top of that, the program allows you to do a cash out, or sometimes they call it a debt consolidation loan. And we've seen quite a bit of that lately too, where you're using the equity in your property to pay down some of or to pay off some of your other debts that you have out there. Want to go through some of the credit stuff within this Native American program. So the big thing that, when we pull credit, these are the types of things that we're going to be looking for to make sure that they're not showing on there before we can move forward. So in regards to foreclosures, if you happen to have a foreclosure in the past, it would have had to have been discharged or sold off within the last 3 years. And then for bankruptcies, they're looking at a 2-year history from the date of that discharge. And then in regards to judgments and liens, the big thing on judgments is you need to show that if you had a judgment, that it's been released for at least 2 years and that you've paid that off within the last 12 months. So 2-year history on judgments being paid off, and then proof that it was paid within the last 12 months. The other thing about the program, which is kind of nice, is, maybe you're an individual that, you don't have credit cards. You pay for most everything, maybe in cash form or check or whatever. You just don't have any debt out there. The program says that we can use 2 alternative credit sources. So if you have, let's say, Netflix or a utility bill, a cell phone, maybe a gym membership, as long as you have 2 other types of trade lines that we could look at to show that you've been making a payment on time for the last 12 months, we can go that route if your credit report has no trade lines showing on there. And lastly, we put on there, it's never going to be a no. It just might be not right this moment based on your current credit. You know, maybe we've reviewed your credit and you've got some blemishes out there that we just need to show a seasoning or a timing period of showing an on-time payment history over the last 12 months before we can actually get started. Or maybe it's the next 6 months. But we're never going to say no forever. It's just, here's the things that we got to get you back on track with so that we can get you through the process and get you into that home. Going through the credit review here. So again, it's not credit score driven. Remember, we don't look at the score so much, we look at the credit. We can use that non-traditional credit. So that's where I was talking about, you know, if you guys have, you know, let's say Netflix or whatever those other alternative credit sources we can use versus, you know, credit cards that would show up on a credit report. Payment wise, we got to make sure that all of your payments are current within the last 12 months. Same with a mortgage or a rent payment. We need to make sure that all payments are being made on time in the last 12 months. And then any collections, again, we can't have any open collections. Even if you had a collection out there that you've worked out a deal where you're making a monthly payment to pay it off, we would have to, based on the program, require you to pay that off before we could move forward. But again, if you have, you know, let's say one late payment and the rest of your credit looks good, it's not going to hold you up, so to speak, from being able to move forward. But these are just some of their guidelines that they kind of have in place around, you know, what we're supposed to be looking at when it comes to credit. Some of the other things we have to look at, and I know it sounds, you know, probably it's stuff that sometimes we pull our hair out with, but it is things that we do have to make sure that it's been documented. Large deposits. So in a lot of cases, when we look at your bank statements, we need to make sure that if there's any large deposits showing up, basically anything over $500, and it just shows up as a deposit and it doesn't explain where it came from, we do need to document that. So we would need a letter of explanation from the individual along with documentation as to, you know, let's say it was a check. We'd need a copy of that check to match up that deposit. Also, you know, we have a lot of times with bank accounts where, you know, maybe you only provided a checking account statement to us. And on that checking account, it shows that there was some transfers to another bank account. Well, the program will require that we get the last 2 months bank statements from that account as well. So just things to keep in mind on that. Same with overdrafts. You know, so when we're reviewing your credit, it's not just the credit report, it's going to be your bank accounts as well. So we need to, you know, make sure that you're not having a bunch of overdrafts in there, that you're managing your funds in a way that you could afford having this new mortgage payment. The other thing on here is student loans. So the big thing on student loans is the program basically states that whatever your balance is on your current student loan, we have to include a 1% calculation as far as what the monthly debt would be. So even if you have, for instance, maybe a student loan set up on an income-based program, the program is going to tell us that we still have to calculate out for your debt ratio 1% of that balance. And then the last thing there, you know, we must be able to document where you've lived for the past 2 years. So when we're reviewing, you know, your overall credit and going through your application, we'll need to document where you've lived for the last 2 years, and then we'll have to do what's called a verification of rent, just to verify that you've been making your rent payments on time with no issues. Next slide, that first bullet point talks about payment shock. So this has kind of been an issue, I should say, within the program, and they're kind of a stickler when it comes to this payment shock. And give you an example of what they mean by this. So let's say you're living with family and you're not paying any rent, or you have a mortgage payment out there, and you apply for the program, and based on your income and debts, you could afford, let's say, a $1,500 mortgage payment. Well, the program's going to say you're going from not making any rent payment or any mortgage payment to now making a $1,500 mortgage payment, which would be that 100% payment shock. And so the program wants to make sure that you can afford, or have the ability, I should say, to make that payment. And so the way to document that is to make sure that you've been able to save money to be able to offset that payment shock. So the program, what we're doing is we're making sure that you have at least 6 months of whatever that proposed mortgage payment's going to be saved up to offset any payment shock. So, if you're not having it, if you don't have a rent payment or mortgage, and your new mortgage payment goes up to that $1,500, basically what underwriting is going to do is going to take that 1,500 times 6. So they want to see that you have around $9,000 saved up, whether it's in checking, savings, a money market account. That way it's going to show that, yep, this individual can make this payment. I mean, they have the ability because they're showing that they've saved up, at least 6 months of money to begin with. So this is somewhat new. However, it has been around for a while. I think they've made it more of a staple, so to speak, within the program, to make sure that we're just not setting somebody up for failure. So that's kind of how they calculate that out, to make sure we're not having any issues with payments. The other thing is filing income taxes. So that's another big thing. We have to make sure that you have filed your income taxes for the last 2 years. Now, if you can document that you've had an extension done for this last year, then we're okay. Then we document the last 2 years, the previous last 2 years. But this has come up quite a bit here lately, where we have individuals where we're doing an application, and then we find out that they haven't filed their taxes maybe in the last couple of years. That will hold up being able to get financing if you haven't filed your federal taxes. Next bullet point there, if you're self-employed, you must provide your full tax returns for the last 2 years, and then we'll need a current year-to-date profit and loss statement as well. So, as you know, there's good and bad to being self-employed. In regards to calculating your income on self-employed, so what we'll be looking at is that net income, and we can add back in depreciation when we're calculating out self-employed income. But we do need to average it out over a 2-year history. So if you are self-employed, you need to show that you filed your taxes for the last 2 years. Next slide here, in regards to some of the special circumstances that have come up. And we've seen quite a bit more of this here lately, which is the non-arm's length transactions. These basically occur when the buyer and seller have a personal relationship. So let's say mom and dad is selling their house to a son or a daughter. They just face a little bit more scrutiny when it comes to underwriting purposes. So just be prepared on that. One of the big things with the non-arm's length transaction is, if, for instance, mom and dad is selling the house to a son or a daughter, as long as it's their primary home that they're selling, we can finance up to that 97 3/4, which is where the down payment would only be 2.25%. But if mom and dad is selling a home to a son or a daughter, or to another family member, and it's an investment home, that's where we can only finance 85% of that purchase price. So like I say in the slide here, just be prepared to answer some more questions around that, if that's, you know, the scenario that that individual has where they're buying from a family member. The next special circumstance, and again, this is not so much a new guideline, but new in the fact that we're seeing more and more of this. So I wanted to put this out there just so everybody's aware of it. This is a situation when, you know, maybe you own your current house right now, you have a mortgage on it, but you're just not quite sure if you want to sell that house yet. However, the houses may not be, you know, big enough for what you need for your family. So you want to buy another house using the Native American program. Well, the program is going to tell us that, you know, you must show that the home has been listed with a realtor or that you have an active lease to rent the home. So you'd have to have those two, one of those two things done if you currently own a house with a mortgage on it. And then on top of that, when we're calculating out your debt to income ratios, we would have to include in there your current mortgage payment. And if it doesn't include your insurance and taxes, we'd have to add those in. So you'd have to income, debt, and qualify with both the old mortgage payment and the new proposed mortgage payment, along with making sure that you have enough cash reserves for at least 2 months after we close on the new house. So again, special circumstances, it's not happening, you know, a whole lot, but it is something new that we are seeing more of. And I just thought it was worth, you know, putting it out there to share in regards to what the program requires around that. Again, that's only if you have a house that you currently own with a mortgage on it. This next slide just talks about the different income that can be used when using the Section 184 program. You know, whether it's your salary, your hourly wages. Now, your overtime and bonus and commission income is definitely income we can use as long as you can show that you've been at that job for at least 2 years, because we have to average it out over that 2 years. Same with the seasonal and part-time income. That part-time income can be used for income purposes to qualify you as long as you can show that you've been at that job for 2 years for part-time income. Same for seasonal. We'd have to show that over a 2-year history. We can also use retirement income, alimony income, child support income. You know, in regards to the child support income, we would need a copy of that court-ordered child support document, as well as the last 12 months of statements to show that individual receiving that child support. Also, we can use rental income. We can average that out based on what your tax returns are showing. And then again, we talked about the self-employment being used. And then we can also use your tribal distributions, whether that's dividend income, per capita, or general welfare income. One thing around those incomes, because we're seeing a lot more of it, especially with that general welfare income. With the general welfare income, it's not taxed. So you're not going to see that on a tax return. So what we need to get from the tribe is a letter just stating what they've received in that per cap or general welfare income for the last 2 years. And these are just some of the liability tips we put out there. Believe it or not, even when we explain to individuals, you know, while going through this mortgage loan process, you know, don't go out and take out any other loans, because depending on what you take out and that monthly debt, it could hold up or stop us from being able to move forward based on that new monthly payment, and then your debt ratio will go up. So while it may be, you know, very tempting, do not go out and purchase a new car, furniture, appliances, or open new credit cards or lines of credit. Just be very strict on your credit while trying to get a home loan. The next slide just talks about different ways for cash to close. And this comes up quite a bit. It's one of the first things people ask, about what do I need for cash to close, and what types of funds, or where can I get my funds from? These funds can come from whether it's a savings checking account. I've had individuals use a secured loan to cover their costs. Those secured loans, we just have to know what that monthly payment is if they do a secured loan. Gifts, I've seen gifts from family members. Also down payment assistance from tribes that can be used. In there it says, if received by cash, it cannot be used. The big thing with cash is it's really hard to document where it came from. So we recommend not getting a gift in the form of cash. This way we can document, the donor that had the funds to begin with to provide it to you. So just keep that in mind. Gifts, make sure they're not in a cash form. Land equity, those come up a lot, when we're doing refinances, rolling in the closing costs due to the fact that they have land equity based on the appraised value. I've seen sale of personal items, whether it's a car, a boat, anything like that. Just make sure you have a bill of sale showing what you had sold, because when we get that bank statement and we see that maybe that large deposit of funds in there, and you explain that you sold a boat, we'll need a copy of that bill of sale to show the make and model of that boat and what you sold it for. Also, obviously, the sale of home proceeds. You're selling your existing home and you're gonna make a profit on that, and use those funds towards the new house. I have seen people use a 401k. They've tapped into their 401k to come up with their down payment and closing costs, as well as like sales of investments, stocks, things like that. The other, I kind of talked about it before, which is down payment assistance from various tribes. Lots of tribes or housing authorities out there across the U.S. provide down payment assistance to their tribal members, and you can definitely use that towards their down payment and closing costs with this program. Wanted to talk a little bit about the new construction. I know in the last previous slides there, I was briefly explaining that the program does allow for new construction, whether that's for a brand new modular house, a brand new manufactured home, or building a house from ground up. The big thing with what we call a single closed construction loan is anything over $25,000. We need to make sure we approve that contractor. So if the contractor's bidding out a house to build for you, obviously anything over $25,000, we're going to do our due diligence and making sure that that contractor financially is in good shape, so that when we close this loan, we're not going to have any issues with that contractor. So we'll have to pull credit. We'll have to look at their assets and make sure that it all makes sense, that they can afford to take on this job of building this house. The single closed construction loan, this is a one-time closing. So you're going to have both your permanent financing and your construction financing all in one closing. So just like you buying an existing house, once you close on that loan, you'll start making a mortgage payment even though you don't have a house built yet. It's a one-time, so you don't go back and close again once the house is done. Mortgage payments start, in most cases prior to that house being constructed. So my example here is, if we closed, let's say in January, your first payment would start in March. Payments are always due on the 1st of each month. You have until the 15th to make your payments. But I'm just wanting you to understand with the single close construction loan, it's that one-time closing. Once we close that loan, all of the funds based on that construction bid go into a construction account. We actually have a construction group within First Tribal Lending. So they will manage the escrow account and be paying the contractors as the contractor gets done. So we'll have inspectors come out, make sure that the work that they're drawing for has been completed, and then our construction group will get those funds paid out to that contractor.
Eric, real quick before you keep going, Lynn had a question. She said, what if the to-be owner is a general contractor? Can he build the home?
Great question. In fact, I literally just had a call with an individual before we got on this call around this exact subject. So this individual, this is what they do for a living. He manages and oversees projects of building houses. The program is telling us that you as a borrower, they recommend that you have an actual licensed contractor bid out the project, because if something were to happen to you, the individual, and the job gets, it just stops, we don't have another avenue to keep the job moving. So you will need an actual licensed contractor to do this. Now, if you can show that this is your line of work, this is what you do on a day-to-day, business, is you're a construction, manager, you oversee this, or a project manager. You also have to show that you have the ability to make these draws, or have enough assets for these draws prior to closing. So for instance, let's say you're building a house for $300,000. The program says that you have up to 6 months to build the house. And so just easy math, if you take that 300,000 and you divide that by 6 months, you'd be drawing around 50,000 per month. So the program says you as the contractor has to show that you have at least 150% more than what your highest draw would be. So if you take that 50,000, times 150%, you as that borrower or contractor has to show that you have at least around 75,000 in assets to cover these draws, because you don't get paid anything until the work is done. So it's going to be a case-by-case basis. If you come to us and you can show us you have the means to be able to do that, we can definitely run that by underwriting in the Office of Native American Programs to see if we can get that exception done to have you, the tribal member, or the borrower in this case, take on that project. So hopefully that helps kind of answer your question. I know it's not a direct yes, you can do it. There's going to be some things that we're going to have to just document and make sure that, you have the means to do it. Any other questions before I move forward here?
No other questions so far. Thank you, Eric.
Yeah. All right, the next slide here I wanted to talk about, and this has to do with land documents. I have to tell you, it's probably one of the most challenging pieces when it comes to financing on tribal trust land. In most every case, when we're doing financing on trust land, it's typically new construction. It's either somebody's putting a brand new modular, manufactured, or building a house from ground up on their particular property, because on most all reservations, there's just not a market to be selling existing homes out there. So one of the big requirements is making sure we have the correct land documents in order to get going. So in a lot of cases, we have the borrower going and, signing a purchase contract on a modular house or signing a purchase contract with a contractor to build a house, but we don't have these land documents yet. And in some cases, it could take 3, 4, 5 months to get these land documents before we can even move forward. So I want to just make sure we go over this so everybody's aware of some of those land documents that really need to be provided up front, so we have those just so it's a smoother process going through the mortgage loan. So a couple things: copy of a fully executed home site lease. We're going to need a copy of that signed by both the tribal member and the tribe. So first thing is just having that fully executed home site lease. On top of that, if it's a tribal trust land where you're leasing from the tribe, we're going to need to get a updated certified title status report within the last 12 months. So copy of a certified title status report in the last 12 months. If it's individual trust land or allotted land where you're owner 1/1, the TSR or that title status report is only good for 6 months. So we need to make sure that it's current within the last 6 months. The other thing that comes up a lot with new construction on the reservation is the tribe, or in some cases, the Indian Health Service, is providing water and sewer at no cost. We just have to make sure we get a letter from whether it's the tribe or Indian Health Service stating that they're providing, whether it's a well or a septic system for this particular individual at no cost. And then that last bullet point, we'll need a copy of the environmental. So the tribe does an environmental on their trust land transactions. We have a specific environmental form as well as a land status form that the Office of Native American Programs has provided to us. And those are the ones that we would have to use. So when we start a new construction loan for an individual, we'll provide that environmental form and that land status form to them, and they'll need to get with the tribe to get those completed and back to us. But these are the main items that I would tell you that typically tend to kind of slow the process down if we don't have those up front. We need that fully executed, recorded home site lease along with that TSR, and then that water and sewer letter, and then the environmental form and the land status form.
There's one more question, Eric. Lisa wanted to know, is the HUD 184 loan program available to enroll tribal members living in urban areas located off the reservation?
Great question. Yes, and it depends on what state they're in. So I'm going to go back here on my slides. Give me 1 second. Let me go. So if you look at this slide that I provided, all these areas like in red. So let's say, in Nebraska.
Her state is Montana.
Montana. So that's an easy one. In Montana, it doesn't matter where they want to live. Anywhere in the state of Montana, you can utilize the program. Yep. So there's full loan approval there, on or off the reservation. Same with like Washington, Oregon, Idaho, Nevada, California, Alaska. All of those allow you to use the program on or off the reservation. It would be, for instance, back to like Wyoming. In Wyoming, there's specific 2 counties that you can utilize the program in. So other than those 2 counties, we wouldn't be able to use the program. Good question.
And then Deborah also had a question. She says, is there a checklist for the process?
For the loan process of getting started? Is that what she's referring to as far as the steps?
Yes, all of it.
Yep. So what we do is we'll send out an email with our, checklist of items that we would need to get from you to do a pre-qualification to begin with. So basically what it is you're filling out a short form application. You're providing your pay stubs for the last 30 days, your W-2s for the last 2 years, your bank statements for the last 2 months. And then if you get per cap or dividend income, we'll need your tax returns for the last 2 years just to show that you are filing that if it's per cap income. If it's general welfare income, we would need to get a letter from the tribe, stating that. But that would be the checklist of things that I would send out to you. Absolutely. This next slide, I put this in here only because it does come up a lot, especially if a tribal member is looking to buy a house off the reservation. The benefits of using a realtor. So a lot of times, your realtor has most of the experience within those areas or those markets that you're looking to purchase a house in. So that education and experience definitely helps when there, comes time to do any negotiations or questions around the area or that market. They may have a better neighborhood knowledge and price guidance on that. They can help with the negotiation skills, handling all the paperwork. And again, they can be that buffer between the buyer and the seller, and also just being able to answer, any questions after closing around owning that house, as well as property tax information.
Eric,
Yeah.
Deborah had another question. After living in your home for a while, can you rent your home out? How long do you have to live in your home as your only dwelling?
Yep. Great question. So the Section 184 program is used for primary housing. So if you use this program, you're basically stating that this is going to be your primary home. You can reuse the program over and over again as long as it's your primary house. So you buy a house today using the program. A year from now, you sell the house. You can use the program again. Now, let's say you use the program today, and a year from now, you decide you want to rent this house out and maybe do something else, for living purposes. The program says, again, this is for your primary house. It's not supposed to be used for a rental property. So hopefully that helps answer your question. It is used for primary housing. This next slide, you guys, this is kind of that loan application process that I kind of talked about. These are some of the things that I'll need to get from you in order to kind of get that pre-qualification down. Again, when we do this, what we'll do is we'll do a soft pull credit on you. And if credit-wise everything looks good, the next step we're going to go through is looking at your income, your assets, and your debts. And so we'll run numbers based on what you have for monthly debts, add in a proposed mortgage payment, and then let you know, based on your income and debts, here's that maximum amount that it appears that you may qualify for. And then my information here on the next slide. Again, you guys can reach me by phone, email. Feel free to call and ask any questions that you like around the program. I'd be more than happy to help you.
There is some typing, a lot of typing.
I see that.
So I just want to make sure everyone is able to ask their questions. So we are going to just hang for a little bit. So if everyone has questions, please feel free to go ahead and type them. I went ahead and put Eric's email in the chat as well. Deborah says, When deciding to make a purchase, can you make a loan for up to a 4-unit multifamily complex?
Yes, good question. You can. So the program allows you to purchase up to you can do a single family, a duplex, a triplex, up to a fourplex. So you would just have to live in one of those, and then you could rent out the others. Now, one point around that, just so we're on the same page, let's say you want to buy a fourplex, and that existing fourplex already has renters in it. You would have to credit qualify based on the full purchase price, but you wouldn't be able to use that income that it's being driven off of right now with those current renters in there, because the program says you've got to be able to show that you've received that rental income through your tax return. So you'd have to credit qualify on buying the entire 4-unit project there and be able to live in one of the units. Yep, good question around that. And the other thing I would tell you guys too that has come up is barn dominiums. I'm sure many of you have seen, or heard about barn dominiums. I mean, they're pretty cool. There's some pretty unique ones out there. The program says that this is for single family housing, and they don't like the fact that it says barn dominium. So if we have an appraisal done, we can't have that appraiser stating that it's a barn dominium. It needs to state this is a single family home. But that is one thing that the program does not like, and I don't really have an answer as to why, other than it meets all the guidelines of a single family home. It's just called something different. In this case, they call it a barn dominium. I'm going through this chat here. How far down?
So if you scroll all the way to the bottom,
Yep.
Deborah has 2 more questions. Can you use the projected income as collateral? And then she had another question right underneath it, and then Anthony's.
Gotcha. Okay. So in regards to the projected income, we can't use projected income to qualify you. Unfortunately, we have to go off of your current income, and that income would have to show that you're going to be receiving that for the next 3 years. We have individuals that, let's say, are on council with the tribe. As long as we can get something in writing from the tribe stating that they're going to be receiving this income for the next 3 years, or that this is their, second term, and they've had a term previously that they've been receiving this, we can use that income. But unfortunately, we can't use projected income for collateral. Good question, though. What about new construction for multifamily? I think we talked about that part of it here. Let's see. We can do the 4-unit. And I'm not sure, Deborah, in regards to construction for multifamily. Like I said, we can go up to a fourplex. What the program doesn't allow is what we call AD units, which is basically, another like a mother-in-law quarters in the back of your house. The program currently is not allowing those, which is the AD units. So Anthony looks like has a question here. I believe there is a list for approved lenders as a PDF file, but how do we determine which lenders are going to be the most helpful and responsive? I've not heard from most of them when I reached out to them several months ago. So I'm not sure, Anthony, when it comes to that. What I can tell you is our group here, we've been doing this program and it's all we do. I say this all the time. I wake up every day to help Native Americans become homeowners. It's literally all we do day in and day out. So First Tribal Lending has been doing this across the board for 25 plus years. So we're here to help. You've got my contact information. I'd be more than happy to help answer any of the questions that you have around the program. So by all means, feel free to reach out. Lisa, I think that was all the questions that I can see there.
Yes, it looks like you got all of them. I'm gonna go ahead and close out my slides, but by all means, if there's any questions, please put them in the chat. Eric will answer them. I went ahead and already launched the feedback survey. The feedback greatly helps us, and it also helps Eric know what you guys would like to see in the future. So please take the time to fill it out. It is anonymous. We greatly appreciate it as well. Our next webinar is going to be July 11th. It is going to be Communications Concepts Part 1, presented by Lisa Perez. As always, registration is free. It will be at 2 p.m. Eastern, 1 p.m. Central, 12 p.m. Mountain, 11 a.m. Pacific, and 10 a.m. Alaska time. Please visit our recorded webinars anytime at www.nativelearningcenter.com. It will be under the recorded Cathedra tab. You can access this webinar recording as well as any other webinar recording for up to 2 years. Please don't forget to check out our upcoming events on Facebook, Instagram, LinkedIn, and Twitter. We also have a podcast called Hope a Thing, a Native American podcast, and you can find that on Apple Podcasts, Spotify, Google Podcasts, Simplecast, and Pandora. Once again, thank you everyone for joining us today. We greatly appreciate it, and we appreciate all your questions. I hope everyone has a wonderful day, and thank you, Eric.
You bet. Thanks so much for allowing me to do this. Thanks, everyone.
Of course. Thank you.